thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. If you haven't followed my channel or my videos, well, I create these videos on a daily basis and kind of give you the uh, details of what's impacting mortgage rates on a daily basis. And sometimes it could come from something like the economic calendar or headline news. Sometimes geopolitical. Sometimes good news is bad news. So the market sentiment changes with investors. And if you're not aware, well, mortgage rates are dictated by MBS or mortgage-backed securities, which are a form of bond and that are packaged up and sold on Wall Street. And this helps. That's why we have reactions to it. Why we have 30-day locks, where we get rollovers in each month, where they reset. And hopefully, this will give you some information as to if you're trying to follow the mortgage rates, whether it's for a refinance or purchase decisions, or perhaps you're in the industry, or just kind of like to gauge things where bonds are going. Hopefully this will give you some good information. A little bit about myself is I am a loan officer. I do work with a national lender, so we do loans in all 50 states. If we can help you with any of your purchase or your refinance needs, please reach out. Otherwise, we can also be used as a resource for questions you might have regards to whether it might be something in terms of mortgage rates or mortgage programs available out there, or maybe the process in general. We're here to help you guys out, and please feel free to reach out. So without further ado, we'll just kind of jump right into it. We'll start off with the economic calendar. I'm going to look at a different chart here than the one here. Usually I use this one, but this other one has a little bit more information on it. So I'm going to just kind of scoot over to here. Um, so today we got a lot of data kind of pointed up here, and the first one is our first look at the Q4 GDP, which will come out, and our final revision will come out in March. So the last revision came in here at 2.3%. The Q3 was at 2.3%. Forecast was calling for Q4 at 5.5%, and then it came in at 6.9%. So much higher than what they expected Q4. This was all mostly up until right around December-ish when the Omicron virus kind of dictated. So we were heating up, and then all of a sudden the Omicron kind of slowed things up a little bit. But that's what they're kind of showing there. Now we also have the durable goods orders. So back in the November, we had 2.6% increase. However, there was forecasting that it would be a drop of 0.5% in December, and a drop much further to 0.9%. Now, if we take out big ticket items like transportation, it rose 0.9% in November. Forecast was calling for 0.4%, and it increased by 0.4%. So transportation kind of had a big number in saying what our overall headline number said, as you can see here. So if you take that out, we were actually in positive territory. Now, every Thursday we get the weekly jobless claims, which are last week was actually revised a little bit higher from 286 to 290,000 people. Forecast is count 260,000 for this week, and it came in at expectations here. So we had a drop of about 30,000 people. However, that's still relatively high, what we're looking for. And as you can see here, the continued claims, it did rise a little bit from 1 week to the next week. And then we got pending home sales. Pending home sales dropped by 3.8% in December for month over month. So it went from 122.4 seasonally adjusted analyzed units all the way to 117.7 for the month of December here. And last but not least, we had the 7-year note auction, which can have some impact. They did have Rick Santelli, who's kind of the expert in the area on CNBC, gave it a B+, so it came out relatively decent. We're kind of watching a lot of these even lower end ones because we're seeing a big flattening in the curve with all this recent activity with the Fed and everything. We're starting to see a flattening curve, and of course that could lead to an inverted curve. And what does that mean? Well, a recession usually follows behind inverted curve, so that's something we have to kind of keep our eyes on here. So right now, let's go ahead and take a look at the 30-year fixed. What's going on? I mean, what's the mortgage-backed securities are doing today? Yesterday, we had the big day, which was the Fed announcement, which both markets reacted rather negatively. We ended up dropping 63 basis points way down here. We did start the morning off higher and did rise. Right now we're up about 27. We're up from the earlier high. We have kind of subsided a little bit since earlier today when we reached the high. Stock market's still in negative territory, and that's kind of helping mortgage-backed securities a little bit. So what's happening is investors' money are flowing from came out both mortgage-backed securities and stocks yesterday. Today is getting kind of more into the mortgage-backed securities after the Fed announcement. They didn't. There's a few things that they didn't really care for, or at least they're still uncertain on. It's more not that they. It's not what he did say is what he, or what he said is not what he didn't say. So basically, he kind of left the table open that perhaps it could be a rate hike for each next meeting from March through the end of the year. That could be a possible 5 rate hikes. He also didn't leave out that he could potentially have, usually it's quarter point increments, or he didn't leave out that perhaps he could do a half a point at any of those. One of the things that kind of hurt the bonds was that he's talking about once he gets the level where he wants to be in terms of long-term about balance sheet retainment. He wants to carry more treasuries than mortgage-backed securities. So he wants to keep the priority more on treasuries versus mortgage-backed securities. So of course that lack of demand doesn't really help us out in terms of mortgage rates. So that kind of put us kind of more in a hole as well, and less desirable for investors. So let's go ahead and take a look, see what what it looked like today. As you saw early on, we shot upwards, then we came back down a little bit after the roughly around the announcements. Announcements came. Most of these came in, just before the announcement, actually. Excuse me. About 8:30. Around 8:30 is when we get the announcements. Then we kind of worked our way back upwards a little bit. And as you see here, just recently we had kind of more of a drop here recently with the red here. And here's where we're kind of over the last few minutes here. All right, so let's go ahead and take a look at Treasuries. If you recall, we were just in this range right here, and then yesterday we shot up, tested the next ceiling, technical ceiling. We did come down a little bit. Right now we're testing this floor again, but we have subsided a little bit. So right now we're sitting at just about 1.8 currently after testing this technical floor, which was our ceiling the other day. The other day here. All right, so if we could break below this, this might help us, give us a little bit more, less pressure on mortgage-backed securities, might help us out a little bit further here. But today after the close, we had multiple multiple rate changes yesterday. So lenders did reprice for the most part yesterday with all the negatives. So we had multiple ones. So after yesterday's close, our pricing should be a little bit better. Hopefully, we gained about almost half. We regained maybe about half of what we lost yesterday. So that's at least a start. Hopefully, we can maintain that. So lastly, why don't we take a look at the average rate for conforming loan limit. We'll start with the 30-year fix, which is at 3.74. The 15 years at 2.97. These do have points built into them, so they're not like a no point loan or anything, and that's why you see not in increments of a quarter or 1/8 of a point basis. So usually, if you're getting a quote from a lender, they give you like an 1/8 of a basis point increment there as well. So. Anyways, to get back to you guys, one other thing I want to kind of touch on so that we have a better understanding is when I touch about these 28 basis points, 100 basis points is 1 point. So 25 basis points would translate a quarter of a point. So that no point, if you're at here, improved by a quarter of a point here, is what that means. Yesterday's, we lost almost anywhere between a half to 3/4 of a point in pricing in terms of that. So hopefully this gives you a better idea of what these basis points, when I talk about basis points, that's what those translate to in terms of our pricing for mortgage rates. All right, folks, I hope that gives you the information you're looking for. Hopefully, if you guys like these videos, please smash that like button, help us out, greatly appreciate it, and share us. If you guys are again, got questions or anything we can help you guys out with, please reach out. We're here to help you guys, help you out. We can give you the rate quotes if you guys are looking for rate quotes. That's not a problem. But we do appreciate you guys. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.